What's up, guys? Welcome to episode 9 in my monthly series where I review my high yielding stock picks from a year ago. So as you know, many YouTubers have stock pick videos where they present their opinions on certain stocks and certain funds and why you should invest in them, but there's usually no follow-up, right? Were they right? Were they wrong? We don't really know in most cases. So this is why I decided that, to be fair to all my viewers, to revisit my old stock picks to actually find out if they were good stock picks or not 1 year later. So in case you're new to the channel or a newer subscriber, please note that I have a monthly series called Top 3 Dividend Stock Picks of the Month for high income, which I have been doing for almost 2 years now. So in that video series, or in those videos, I give you guys my opinion on which 3 stocks or funds are great buys for the upcoming month. So this monthly series, this video here, is basically me going back to review those stock picks a year later and see if I was right or if I was wrong. So doing this kind of holds me accountable, right, for my stock picks, and further proves what I always say, that I will always be a complete, honest, and open book with you guys, which I know many of you appreciate. I will never ever pretend to just know everything and to always be right, because that is impossible. So it's time to review my stock picks for the month of December 2020. I will not only check the share price, but also the status of the dividend or the distribution, which is even more important for income focused investors like us. So was I right? Was I wrong? Let's find out together right now. All right, guys, pick number 1 for my December 2020 picks was CGXF. This is the Gold Giants Covered Call ETF. You guys know I love this ETF. So this is, like the name says, an ETF that holds the biggest gold producers in the world. And like the name says, also it uses a covered call strategy. So during the time of the pick, the stock price was $13.11, which was yielding about 8.73%. Of course, keep in mind that CGXF, the quarterly dividend, varies every single quarter. You cannot predict it, so you can't say it goes up or it goes down. It just follows what the covered call premiums are pretty much doing, right? So this was at a pretty big discount from its 1-year high of 1746. So what was my key points in reasoning? Why was this a stock pick? It should be pretty obvious. Gold stocks, anything to do with gold, tend to fall during a strong bull market, right? This is a very known market trend. So gold exposure always provides a hedge or kind of a safety net against stocks or the overall stock market when there's a lot of volatility. So it's also very hard to get consistent income with gold or gold stocks because the individual stocks tend to have very low dividends. So this ETF really solves that problem because there's great dividend yields, or distribution yields rather, thanks to those covered calls, because you have the dividends and the covered calls. But for this ETF, most of the income comes from the covered calls, not the dividends. So this the dividend yield for this at the time was over 8%, which is very rare for gold. So this pick wasn't really a surprise, because during December 2020, market started going up and up and up. We were in a nice bull run, so this ETF started going down, and this is why I chose this pick. It was a pure value play. Pick number 2 is the Chemtrade Logistics Income Fund. So this is a individual company, even though it says income fund in the name, and basically it's a chemicals business. They provide industrial chemicals to customers and people all over North America, around the world. So they deal with chemicals. I do not really know that much about this company, but what I do know and what I liked about it is because it was considered an income fund. That's why you have the .UN there. So it was generating consistent monthly income. So at the time of the pick, I have to say this was a pretty good one, because it was only $5.14, which was giving you a really big yield of 11.67. The 1-year high was a lot higher than that, more than double, at 11.45, which was giving a yield of 10.48, but that's before the dividend reduction, which we'll see in a second. So my key points in reasoning: this company was suffering because, now I remember, they provide a lot of chemicals to the oil and gas industry. So because of oil demand fell, their business suffered. So my points in reasoning that the demand for their products will grow when the oil prices start going up, which was already starting to happen. This company is actually set up as an income fund, like the name says. So the goal is to provide consistent distributions to shareholders. And the reason for the really big drop in share price is because they reduced their dividend by 50% from $1.20 a year to 60 cents a year. So this really made the stock price go down. But when the dividend gets cut in half, it just means that it's much easier for them to afford the dividend going forward. So another value play here, another stock where people exited because of the panic, because of that dividend reduction. But I always look at this stuff as an opportunity. The third pick was Morguard REIT. So this is a single REIT. I don't own this one anymore. Just like Chemtrade, don't own them anymore. Sold them off because, like I keep mentioning, I'm starting to get away from single companies and single REITs. So the stock price for Morguard REIT at the time of the selection was $6.12, less than half of what it was a year ago, which was pretty crazy. So Morguard REIT is a small cap Canadian REIT. They own commercial property, but pretty much all retail and office. So the most undesirable, or the properties that really suffered during COVID, because these guys especially own a lot of big malls. So points and reasoning shouldn't be a surprise. Commercial real estate, especially retail and office, which is exactly what these guys do, was extremely undervalued because of COVID-19, because of the closure. So this REIT took a really, really big hit and was much slower to recover compared to other REITs, like I say here, because they have a lot of enclosed malls. They reduced their dividend by 50%, and we'll see that they actually reduced it again by 50%. And like I say here, even with the reduction of 50%, they had a 66% payout ratio, which is very conservative. So in my opinion, this was a great buy. So those are the picks. Let's check out the report card. How well did I do 1 year later? Let's check it out. So CGXF, guys, right now it's at about $11.41. So it's actually lower than the time of my stock pick, about 13% lower. In terms of the dividend status, this dividend fluctuates, so there's no real change in that. So I put, was it a good pick or not? I would put neutral because the price is lower, but it's not really surprising. Gold and gold producers drop when markets rise, and the bull run just kept going and going and going. So gold went down a little bit, but maybe now is the turning point. I'm not sure. I don't want to speculate, right? Chemtrade Logistics was a really good pick. It's at about $7 now, a little over $7. So you would have made almost a 41% gain in a year. The dividend is unchanged. It's still at 60 cents a year. I did sell my position off in Chemtrade. Like I keep saying, I'm getting away from these single stocks and single REITs. So there's still going to be a few more months coming up where there are some single stocks and REITs. But starting in early 2021, mid 2021, you'll see that there's barely going to be any. There's barely going to be any single REITs or single stocks as stock picks. They're going to be mostly funds and ETFs like CGXF. So Chemtrade Logistics are really good pick here. For Morguard REIT, it's my first pick where I have to say no, it was a fail. It's not a good pick because number one, the price is lower a year later. Right now, it's a little over $5. So you're looking at a 16, almost a 17% reduction. So these guys, they own a lot of office and a lot of closed malls, and that real estate is really, really suffering, and I guess very, very slow to recover. It could take a few more years for the stock price to recover. And on top of that, I couldn't believe it when I saw it. They reduced their dividend again by 50%. So it's, they did it again by 50%. So I would have never guessed, because their payout ratio was at the time of the selection, and after the first 50% reduction was at 66%. But I guess their balance sheet was getting killed with all the malls closing and all that, and I guess that they had no choice. So for this month, I have to give myself probably a B- or a C+. So Chemtrade was a saving grace. At least there's a plus 40% there, which makes up for the other two. But the Morguard REIT was really the disappointment this time. So I would say C+, B-, something like that. So there's the report card. And keep in mind, guys, you could download this report card for free on my website in the free tools and section. So of course now I hid all the other months, but all the other months are there. So if ever you want to see everything, all my stock picks, I will always update it on my website, so you can download it there. So as always, please support me and this channel by hitting the like button, guys. I would really appreciate it. It's free for you and it helps the channel grow, so it's a win-win. And if you like this type of content, make sure you're subscribed and hit that bell button, because every single month I have stock pick videos, and every single month I have stock picks reviewed video like this one to keep myself accountable. So if you like this type of content, if you're an investor who likes to invest for passive income, this is definitely the channel for you. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could access my digital product, the Ultimate DIY Investing Package version 3. You buy it once, it comes with lifetime updates. What is this package? I have a specific video that shows it in detail, but in short, it's something that I created as a companion tool or a reference tool to help you really navigate all the information out there and help you build your own custom portfolio, your own investing portfolio according to your needs, whether you're an income investor like me, a growth investor, a dividend growth investor. So this product is definitely for you. It has multiple sample portfolios, 14 total, 7 for Canadians and 7 for if you invest on the US stock market. So if you're American, this product could also be very good for you too. And also on my website, right there on the homepage, I do offer a one-on-one consultation service where you could chat with me personally for an hour via Zoom. You could ask me a million questions. I'll help you build a new portfolio, transition to an income-focused portfolio, whatever your needs are. So my appointments get sold out very, very quickly. So I'm full until mid-December, but in mid-December, I will open the calendar up for December and January. So stay tuned for that. Stay tuned for I'm going to make an announcement on Facebook and also via YouTube when the appointments are open. So don't worry, I will keep opening slots because I keep getting emails of people asking, when are you going to open? Can you squeeze me in? So I don't have a reservation system per se, but don't worry, I'm going to keep offering these one-on-one consultations. So very easy right there on the homepage to book it. Just check the little message on top of the calendar to see if the calendar is actually open or not. So finally, guys, my mission and of this channel, it will always remain the same. It's to help everyday normal working people invest on their own, DIY investing, so they could build their own stream of passive income and enhance their quality of life and become financially independent like us. So make sure you follow us on Instagram. We're on Instagram if you use that, and join our Facebook group as well. And with that, guys, continue to stay safe. Make sure you get your vaccines, and see you next time.